Quite an interesting day for stocks today, and we had a quite mixed bag of things happen. The broad market, we're going to stay away from that for now. We're going to stick to what we've been talking about and the strategies we've been talking about on this channel. And again, we have a little bit of a mixed bag. We had energy, the price per barrel of oil, up quite significantly in the morning. It come back down. It rallied again. And we saw stocks like Exxon be down at one point and then closing up around 1%. We like to see that to new 52-week high on a big company like Exxon. And companies like Schlumberger should, I believe, follow suit and head towards new 52-week highs. Remains to be seen, but we'll see what happens. Another thing that we talk a whole lot about is inflation. And yesterday, I was ringing the horns, gloating, etc., how bond yields were rising, and this was counter to last week's fall after the Fed talked. Today, that is reversing, and bond yields are now falling again. This leaves me questioning. I don't really have an answer as to why. I have heard many compelling arguments on why inflation may be transitory. I saw a Bridgewater letter that says that they actually believe the supply chain related issues are not supply related and are demand related. I don't think that's the case. I think we're seeing unprecedented levels of unusual port activity, and that's not entirely demand related. In addition, cars have obviously been supply chain related. So there's a whole lot of various arguments out there about inflation. And I'm just going to stick to my view, which is things in the economy have changed. People have retired. People have left the workforce. That is creating a labor issue. The price per labor is going up. That's going to be translated into final goods. In addition, the money supply has increased. So the value of the dollar relative to these goods has fallen. To paint this a little better, we hear Bitcoin at all-time highs. That's another way of saying that Bitcoin relative to the dollar is at new all-time levels. So $1 can get you less Bitcoin than it used to. In addition, we've got labor, we've got money supply increases, we've got low interest rates. Every force that can imply inflation is currently occurring. So the deflationary force, which I've heard the best cases typically revolving around automation, I don't think are systematically fighting each individual force. The automation thing, this is Cathie Wood's argument that the economy is going to increase its automation and therefore going to solve the labor issues, take labor out of the equation, and decrease prices. Now, my rebuttal exactly to that claim is the assembly line. Well, first of all, before we get there, automation has occurred. Tesla uses a lot of automation in their factories. Many businesses use automation throughout. Automation has been continuously increasing for hundreds of years, since the printing press, since the steam engine, etc. The assembly line is considered a massive revolution in automation. It made the factory significantly more efficient, and the Model T was the first model, I believe, to use Ford's assembly line. The price of the Model T was $850, which I guess was cheap for the time. However, now the price of a Ford starts around $20,000, yet automation has improved. The way I read this is maybe automation will have a short-term effect, but what matters is the actual inflationary forces of low interest rates, of increases to the money supply, of government spending, of supply shortages and labor shortages. Those kinds of things are inflationary. And I guess the labor shortage, even if we had a labor glut, that is only one of many forces, and automation will increase. We would solve the labor issue with that for sure. But then all of a sudden, you get into the materials costs, which are going up. And what are you going to do with that extra productivity? Well, you're going to invent new things, new creature comforts, etc. Increase the complexity of cars. The next thing you know, you've got a more expensive car again. So I don't think it is a complete rebuttal to inflation. Now, I obviously respect Kathy Wood. I'm not trying to say she's not, time will tell. But that is how I interpret the argument. The inflation picture has gone on longer and been more exacerbated than virtually everyone in the transitory camp believed. We get the CPI tomorrow. We're going to see how that comes out. Regardless, we still like energy, even if it's lower, CPI. MP, mining and materials company, of which we have 3, but we'll talk about just MP today because we talked about the other 2 yesterday, was down over 5% first thing in the morning and then closed over 2%. Again, we've recently had a short report on that. Didn't present anything new. I took a look at it. I'm not too concerned. So, I'm sticking to the fundamental case. These people own a U.S.-based mine. Okay, the fear around these mines is when they're foreign and the foreign government can just take them over. The U.S. is a little different than hostile governments. So it's good that it's on U.S. soil. It controls rare earth metals and magnets that are going to be used and are used in electric motors and drones. And the founder of this mine is a former hedge fund manager who believes it will be part of the next industrial revolution. In his own words, I'm along for the journey. So today's action looks quite interesting. I'm not saying I'm buying more. I have quite a large position. It's one of my larger positions. But I'm just letting you know, because I've talked about this stock here on this channel, that something interesting was going on in it today. Other than that, market's looking a little mixed. We'll see how things go and happen from here. Again, we are not really playing the broad market. If you had to put on a hedge, yes, we do occasionally over here buy SPY calls, buy more so SPY puts as protection. Right now, I'm not doing that. I'm just sticking to the companies I like and holding. We'll see what happens. Ultimately, I think inflation is occurring, and I don't want to have cash. I think stocks are the best place to go during inflation. And while I am hearing quite compelling arguments that inflation is not going to be persistent, I still have my doubts. So that's today's video. And until next time, peace out.